Have you ever wondered how you can legally reduce your tax bill and keep more of your hard-earned money? Today, we're diving into a topic that every smart investor should know about: tax assets. My name is Carmine Coppola, co-founder of Strata Capital. My firm has strategically been harvesting tax assets for our clients over the last decade. In this video, I'm going to show you why you need to start harvesting tax assets and some of the strategies that we use to lower our clients' tax bill. So, what exactly are tax assets? Well, they're financial resources that can help you lower your future tax liability. Think of them as little tax savings you can use when the time is right. There are two main types of tax assets you need to know. The first are deferred tax assets. These come into play when you've overpaid taxes or incurred losses in a particular year. These losses can be carried forward to offset future taxable income, meaning you could pay less in taxes down the line. The second type is tax credits. Unlike deductions, which reduce your taxable income, tax credits directly reduce the amount of tax you owe. It's like having a gift card to use when it's time to pay taxes. In this video, we're only going to focus on deferred tax assets as we have more control of how we gather those. So why should you care about gathering tax assets? Well, let's break it down. First, you can offset gains from other investments, reducing your overall tax bill, and more profits stay in your pocket. For example, say you own XYZ Corp stock and you currently have an unrealized gain of $100,000. You also have a diversified portfolio with many different holdings. You decide it's time to sell XYZ Corp, which means you'll have to pay $15,000 or 15% in taxes. But wait, after looking at your holdings in your diversified portfolio, you see that you actually have a $50,000 unrealized loss. You sell those positions, take the loss, and now your tax bill goes from $15,000 to $7,500, cut in half. And it's not just about saving money in the current tax year. By strategically gathering tax assets, you can defer taxes to future years. So not only are you keeping more of your money invested and letting it continue to grow, you are also increasing your tax asset balance, otherwise referred to as a carry-forward loss. This is the component that presents the largest opportunity for you, and where we provide a ton of value for our clients. Let me walk you through how this works. Let's go back to the example from earlier. You have an unrealized gain of $100,000 on XYZ Corp and want to sell. You were smarter in this scenario. Over the last 10 years, you've been strategically harvesting tax assets and now have a carry-forward loss of $300,000. So now when you sell XYZ Corp, you don't even have to touch your diversified portfolio. You can use $100,000 of your $300,000 in tax assets to offset the gains and net $0 in taxes. The same situation can apply to selling an investment property. Quick side note, in these examples, I've been using 15% as a long-term capital gains rate. Keep in mind that this rate can go up to 20% depending on your income. You also have to account for state income tax on the capital gains. Some states, like New York, allow you to carry forward losses on the state level too. Tax assets can also reduce your ordinary income tax. In many jurisdictions, up to a certain amount of capital losses can be deducted against ordinary income tax each year, further lowering your tax burden. In short, tax assets are a powerful resource in your financial toolkit. By understanding and gathering them, you're not just saving on taxes, you're giving your investments more room to grow. There are also risks associated with gathering tax assets, so make sure you understand the tax laws when developing your strategies. If you want to learn how we harvest tax assets for our clients, there'll be a video link in the description where I go into detail on our strategies, how they work, and the risk associated. So what are you waiting for? Start gathering those tax assets today and let your money work smarter for you. Thanks for watching, and don't forget to like, share, and subscribe for more tips on being smarter with your money. And as always, if you have any questions, you can email us at admin@stratacapital.co. Thanks for watching today's video. If you want to see exactly what we do for our clients in terms of reducing their tax bill, beefing up their investments, and planning for the future, or if you want to just book a quick telewealth call, click on the link in the description. See you on the next one.